On Thursday, the Labor Department announced that headline CPI rose 0.2 of a percentage point on the month and 2.4% year over year. The monthly rate matches the increase in August, and the annual rate is 0.1 of a point slower than the pace set in August. However, both numbers for September were 0.1 of a point faster than economists had projected. As for core CPI, which excludes food and energy prices, the news was a little bit more concerning. While monthly core CPI also came in even with the previous month, rising 0.3 of a point, the annual rate actually picked up speed, landing at 3.3%, 0.1 of a point faster than in August. And like headline numbers, both the monthly and annual core readings came in 0.1 of a point faster than projected. A big part of inflation relief last month came in from a 1.9% decline in energy prices, but upward price pressures were evident in a number of categories, including food, vehicle cost, medical care services, and even apparel prices, which jumped 1.1%. The report prompted some analysts to warn that the Fed and consumers may continue to face upside risk from inflation through at least the near term. It turns out some of those upside risks may have been prominent in the minds of several Federal Reserve policymakers last month as they were deliberating about how to proceed with interest rate reductions. On Wednesday, the central bank released the minutes of the Federal Open Market Committee's September meeting, where officials not only agreed to cut rates for the first time in more than 4 years, but did so by an extra-large 50 basis points. However, a review of the meeting summary reveals there was a fair bit of disagreement among participants about whether a decrease by 25 or 50 basis points was the better way to go. Some policymakers made clear they were less concerned about possible weakness in the labor market and more focused on whether inflation is moving sustainably back toward the 2% target. According to the minutes, some participants observed that they would have preferred a 25 basis point reduction of the target range at this meeting, and a few others indicated that they could have supported such a decision.